Uh, Good afternoon.
Good afternoon, sir.
Okay, so you're welcome to day one to the intervention.
Thank you.
Yeah, but before we start, let's set some ground rules for our intervention. Number one rule is that there is a revision. Intervention basically means a revision class. We are just touching on certain key areas in the syllabus, aiding your preparation towards a paper. So the first thing I wanted to know is that it's a revision class. It's not going to be a normal class. So what we'll be doing more will be more of revision. We'll just be revising certain key concepts. We'll just be revising certain key concepts. So that will be the focus for the discussion. And number two, to avoid a lot of interruptions, if you have a question, a contribution, if I ask a question and you want to answer, please raise up your hand so that you'll be called before you answer. So these are just my two ground rules that we need to set the parameters straight before we start with the intervention. Okay, so we can start with the structure, or is that the first thing I touch on before we start? The structure of the PSA paper. So we're expecting question one to be on the financial statements. Yeah, and that will be for 20 marks. That will be 20 marks in that regard. So question one will be starting touch on the financial statement, whether preparing the statement for the consolidated one of Ghana, that's for the whole of Ghana, or you're just doing it for a covered entity. So that is the first thing we need to know. A minute. Yeah, so that's the first one we need to know. Then question two, we'll basically touch on the Ipsas. So the Ipsas will be covered under question two. Then for question three will be question three is in two parts. First one will be on paper framework, which is expected to be 10 marks. Second aspect will be on the EFM cycle. EFM cycle and budgeting. That will also be 10 marks. And then question four will be on the evaluation of the financial statements. That will be for 20 marks as well. So evaluation can come in the form of the ratio analysis. And then ratio analysis, we have it in two forms. You can do that of the public sector firm. So basically for a public sector entity, that could be the central government or a cabinet entity in that case. Or we can have that for also a state-owned enterprise. Then we can have that of common size analysis. Then lastly, we can have that of budget performance reports, which deals with the variances. Then we have question five, which will basically be on the other theoretical topics in the syllabus. So other theoretical topics here, this is where he spoke about the public officers and the others. Those will be covered under question five. So governance, I think that whole topic is governance in public sector. Governance in public sector. Yeah, you look at the functions of the real public sector entities and then the rules of certain public sector public officials, yes. Then look at certain issues in governance as well. And then sustainability issues. So issues of sustainability too is covered here. Stakeholder mapping. So any other theory, stakeholder analysis in public sector, and then any other item, any other theoretical concepts can be examined under the question 5. So question
Conceptual
5 is also
framework.
20 marks. Yeah, so
Conceptual framework.
conceptual framework. Yeah, you're right. But next time, please raise up your hand. So conceptual framework. And as I said, any other theory topic, let me do this ETC, any other theory topic in the syllabus. So this should give you a hoopable 100 marks. Now, let me talk about approach to answering question, what I believe in. Everyone and what they believe in. So I'll just talk from my experience and what I believe in. So approach to answering the question. I'll be the first now to talk about approach to answering the question. So answering questions. So first, I'll talk about my recommended structure of answering the questions. First, I'll talk about the structure or the order in which you should answer the question. For me, I believe you should finish all your theory. To finish all your theory questions first. Answer all theory questions first. That's what I believe in. Like quickly do your theory questions first, which will be question 5, definitely, and question 3. So question 3 and question 5. Quickly do question 3, question 5 first. You can quickly do question 3 and question 5 very well. Then afterwards, you go straight into doing that of question 4, evaluation of a financial statement. And yeah, with the report, in the past, it was just 5 marks. The report was just 5 marks, but now in the syllabus, it ranges between 8 to 12 marks. So I recommend you learn how to write a report. So look at how to write a report, though. I recommend you learn how to write a report very well so that I can write a comprehensive report for evaluation of a financial statement. Then from there, you go to the question 2 on the Ipsas. You know, we have a vast Ipsas. We don't know the one the examiner will test you each diet. We can only propose, look at trends and analysis and propose some. But the Ipsas are broad. So you also go on to question 2 on the Ipsas. Usually you may see a maximum of 3, 4 Ipsas. In some instances, it may just be 2. The lowest the examiner has tested is 2. The maximum so far I've seen is 4. So you may see 4, ranging from 2 to 4 Ipsas being tested under question 2 on its own. So you quickly do the ones you have learned and then you have seen them. You can do quickly before you go to question 1. Question 1, the financial statements. And because we usually do question 1 as the last question, we advise that then in the exams you'll be given 15 minutes reading time. We advise that as part of your 15 minutes reading time, dedicate some aspects of the time to do the classifications of the items for question 1. Usually question 1 will give you a trial balance or a list of balances. They'll give you a list of balances. So beside them, just write your classifications of the items. So those who usually join our usual tuition, you realize that whenever you're solving question for financial statement, we do the classifications first before we even start solving. That should just make you aware of the classifications, how you go about them in the exam situation. So do the classification of the item. Oh, this one is a direct tax. So you just write DT, a short form of it. Oh, this one deals with compensation, maybe C. This one deals with goods and services, maybe GNS. So you just write these abbreviations there just to help you so that when you get there, you can be a bit faster to finish that as well. So these are the areas in which the examiner will test you on, and these are my approach in answering the question. So first do the theory first before you do the calculation theory. Finish with the question 5, then go to question 3, finish with it. Then start with your evaluation of financial statements. Go to Ipsas and then end with question one. So this is usually my recommendation when it comes to solving of a PSA question. And over the years, that's what I recommend for most of my students. I would strongly detest students who start with question one because most of my students that started with question one in the exam never finished the paper. They either got to they did 3 out of 5 questions, or some even did 2 out of 5 questions because they dedicated a lot of time on that question one. So I usually don't recommend you do question one first. Quickly do your theory where you can score majority of the marks at. So my recommendation, if you have to specialize in anything lately, learn the question five very well. Learn it very well. Master all your theories very well. Solve all the past questions there is on question five. Master it very well. And that of question three, master it very well. These are the places you can score huge chunks of marks at. So once you have been able to master them, and those ones are theoretical. So it's you knowing the point and you being able to explain the point. So once you have been able to do that, you'll be able to grab the marks in that regard. Then for question four, also it's a straightforward area. So far in PSA, the question four has not been anything complex I've seen. As compared to nowadays, what comes in FR, where they have to always adjust before they even start calculating the ratios. For PSA is straightforward. You just have to know the formula and how to input the figures into the formula and get your answers. So straightforward, go and do the ratio calculations and then write a very good report in that regard to get your question four very well. Then from there you move on to the Ipsas in that regard. Do your best there. Then you end with question one. So this is the approach I recommend for answering the question. For answering the question. Now let me look at common mistakes. Let me talk about common mistakes made by students over the years when it comes to public sector accounting and finance. Number one is when the question says explain. You may see a question like this. Let me use an example. Maybe explain the 7 lowland principles of public life. And maybe you see 7 marks. So maybe explain maybe 4, 7 principles of the lowland principles. And you have seen the examiner saying 7 marks. Yeah, 7 marks. Then this one cries straightforward. You may be able to tell me what I mean. Okay, let me do it this way. Let me add another one, for instance, like states, or let me do it this way. Explain 3 importance. Okay, let me do it this way. Yeah, 3 importance of the lowland principles. And you see 3 marks. Okay, there, 3 marks. Yeah, so once you see explain, yeah, some of the mistakes students have done over the years. I think for this one, some of them might even get it. But most of the errors people have done over the years is that when you just see maybe 7 principles, you see 7 marks, the likelihood that you are going to state will be high. They are just going to state without explaining. And then if you have been privy to their marking scheme, you realize that the marking scheme is quarter. It's not one as you may think it is for maybe your university exams or what other rubrics may have. The marking rubrics is not usually done. The scheme is not done in that regard. You see quarter. So meaning they're expecting you to say this, you get a quarter mark. You say this, you get a quarter mark. You say this, you get a quarter mark. So most of the times you may hear people saying that, oh, I've written palm, but when it comes, there's scores they got. So we wonder, did they really write as they portray? That is one of the main reasons. So most of the times you may see that with maybe questions that ask importance, that you may just have to write maybe a sentence or two. Then you see explain over there. You see 3 marks. The likely someone will just think that, oh, let me just write 1 point for 1 mark, 1 point for 1 mark will be high. No. What I will usually tell all my students is that even if it's 3 marks and you're writing a point and you know you are behind time, I'll tell you that add 1 sentence explanation. If you can't write anything, add 1 sentence explanation. So if you are behind time, you have seen that, oh, then this mark is small, you don't want to waste time on it. If you can't write at all, apart from you stating your point clearly, write a sentence explanation. If You won't be able to write it maybe three sentences or four sentences. Just write at least one. You know you're behind time. Try and write one sentence. So that's one of the common mistakes students do. I've spoken about two common mistakes. Those three usually start with question one, the financial statement first. And secondly, in the approach of answering the question, people don't look at the marks allocation. Number two, and most of the time, the chief examiner's report always talks about that. The third one I'll talk about will be students don't answer the requirements of the question. I think it was that last diet or so. The examiner asked the question on I think was it the three importance of the seven principles of non-land principle. I didn't quite like how the examiner wrote it in my second point. I think it was three importance of the seven principles of the non-land of the seven principles of public life, non-land seven principles of public life. And if you check the chief examiner's report, the chief examiner's report said that instead of students to give the importance, they're rather explaining the lowland principles. So always I'll advise you read the requirements. Don't be in a hurry to answer. Just read the requirement. Know what the examiner is asking of you. You may know, but if you don't take care, you may deviate and write something else. So look at what the examiner is asking from you and then answer that in that regard. So these are some few comments I'll make. Then we zoom into today's emphasis. Today, we're looking at the Ipsas. That's my emphasis for the day. So pick some of the Ipsas questions. We do a revision on what it is, what the rules are, then we zoom into the solution of it. So these are the questions we'll be looking at for today. We're looking at the Ipsas and we'll pick them one by one. Okay, can we get a reader for the day? Someone's read for us.
Yes, please, a minute. A minute. Yeah, good afternoon. So please, this is a live session. So we are going to encourage everyone to turn off their video so that it wouldn't cause any disruptions. So if you can turn off your video, I can see that of Kwesi Ebuamangwa. Can you turn off your video? Okay, was. All right, thank you.
Okay, who is Zoom user? Zoom user, I think your hand is up. Do you want to read for us?
Yes, please.
It's
Okay, go
Madam
ahead.
Irene on the call. Madam Irene. It's Madam Irene on the call. Madam Serena, are you on the call? And then Madam Sarafin, you can also help with the reading, okay? Madam Sarafin can help with the reading.
Sir, please, you said what?
You can also help with the reading.
A minute, please.
No. When they are done, and then in case he needs another person, then you take over. All right.
Okay, Zoom user, so go ahead, read for us.
Okay. The Ghana Broadcasting Corporation is a public corporation engaged in the radio and television media. The following inventories were available at the year end: costs, net realizable value, current replacement cost, and their respective values. Required: calculate the total value of closing inventory at year end. B. You are a
Okay,
newly
it's
qualified
okay,
chartered.
A is okay. Let's do it one by one. So A is fine. So A, let's see, which episode does A belong?
Ipsas 12.
Episode 12, that is inventory, right?
Yes, please.
Okay, so let's look at the rules for inventory. What are the measurement rules for inventory? We said initial, we measured at what costs, right? What about subsequent? Okay, Doctor Johannes, I'll go ahead.
I think I didn't lower my hand the first one.
You said
Lower of cost and net realizable value.
lower of cost and net realizable value. That one is for what type of inventory?
That is when it's for sale.
When it's held for sale. So yeah, when the inventory is held for sale, it will be lower of cost and net realizable value. So we'll pick the lower amount. Okay. Which other one do we have? A different person? Yeah, Helen, go ahead.
The other one is the consumable, which is lower of cost and current replacement cost.
Lower of cost and current replacement cost. Okay, that's good. Which other one do we have? Yeah, Helen.
So we have agricultural produce.
So agricultural produce.
It is measured at fair value.
It's measured at fair value
Yes, please.
at the point of harvest, right?
Yes, please.
Okay. Last one. What's the last one? I think this one is fair value less cost to sell at the point of harvest. So what's the last one? Oh, Mayeko, have you forgotten? Hiring, yeah.
Yeah, the inventory, fair value.
Hiring.
Biological assets. Biological assets.
No. That one is a different standard. We get there. No.
Listed at point of harvest.
Inventory, Someone was saying it.
Listed
Yeah, give to
inventory.
someone. Give to someone. Yeah, your hand is up.
Sir, please, inventory from non-exchange transactions.
Exactly. Inventory from non-exchange transaction. And what do we use?
Fair value.
We use a fair value. Okay. So remember the agricultural produce we made, I think your notes, I said NRV, right? Which is the same as fair value less cost to sell at the point of harvest. So that is that. So these are the measurement rules you need to know. So if it's held for sale, lower of cost and net realizable value. If it's a consumable, lower of cost and then carrying replacement cost. If it's an agricultural produce, it's the net realizable value at the point of harvest, meaning you pick the selling price, you less the cost to sell. And if it's an inventory from a non-exchange transaction, in the case whereby the inventory has been donated to you, a public sector entity, you may receive a donation in inventory. So in that instance, the value you use will be the fair value of the item. So that's that. Now let's come to our question, the A that we read. A is on consumable and then finished goods held for sale. So consumable, the measurement rule says it's going to be lower of our costs and then our what? Current replacement cost. So we'll check 5,000 and 1,900. Which one is lesser?
1,009.
Raise up your hand. Which one is lesser? The cost and the current replacement cost. Which one is lesser for Eric? Eric. Okay, I think Eric is not here. Dorcas, your hand is up.
1,900. Sorry.
Okay, 1,900. Then we come to finished goods held for sale. That one is held for sale. If it's held for sale, we spoke about the measurement here. If it's held for sale, it's cost and then the net realizable value. We compare the two. So when we compare the cost and then the net realizable value, which one is lesser in this case? Yeah, Dorcas.
The cost, which is 30,000.
Exactly, the cost is lesser. So when we are done, we sum the two together. That will give us 31,900. And this will be the answer for A. This is our answer for A. Okay, Zoom user, go ahead with B for us.
You are a newly qualified chartered accountant working with the Ghana Audit Service. You are currently in charge of the review of audit work carried at the Ministry of Agriculture. You are to advise on the following issues raised by the junior auditors. It was revealed that on 1st October 2023, the ministry received a donation of 10,000 quantities of maintenance materials from Rana Motors to maintain its farming equipment. These maintenance materials meet the definition of an inventory. The materials had a current amount of 596,000 in the books of Rana Motors, but had a fair value of 700,000 as at 1st October 2023. The maintenance materials originally cost 650,000.
Okay, let's pause there. So let's do I, then we come to I. So we are still on inventory. So yeah, let's first identify the type of inventory in this question. What type of inventory do we have in this question? Yeah, Ransford.
I say agricultural produce.
Agricultural produce. I'm tempted to say no.
Yes.
Yeah, it's maintenance materials. It was used to maintain farming equipment. Doesn't mean it's an agricultural produce. It's not agricultural produce. Yeah.
Yes.
Madam Dorcas, yeah. Yeah, Dorcas. Madam Dorcas. Johannes, go ahead.
I'm thinking it's consumables.
Consumable. Okay. Why are you saying it's consumable? Okay, another person's hand is up. Christian, go ahead.
Yes, sir. I'm thinking it's an inventory for non-exchange transaction. Because it's a donation.
Exactly. First sentence, oh, receive the donation. So this is an inventory from a non-exchange transaction. What's the rule for non-exchange transaction? Use the fair value. So when we come here, what's the fair value here? 700,000. That's your answer. Yeah, done. So this is our answer. 700,000. Is there a question on this? Kwesi Yebua. I think your hand is up. Do you have a question? Okay. Okay, that's fine. So let's move on to II. So I read up. Can move on to II for us.
Due to the shortage in the supply of tomatoes coupled with increase in prices, the ministry offered 44,000 boxes of tomatoes for sale to citizens. The fair value of each box was 1,800 cedis at the point of harvest. The market women who act as agents charge a commission of 10%. The production cost of each box is estimated at 1,500 cedis. The ministry had 924 boxes of unsold tomatoes at the year end of 31st December 2023.
Okay. What type of inventory are we dealing with in this case?
Agriculture.
Yeah, Kwesi, yeah, boy, your hand is up again. Okay, the next is
Agriculture,
Helen.
fair value.
Agriculture, agriculture. But agriculture is not fair value. Initially, when I corrected it, it's not fair value. It's fair value less cost to sell or net realizable value at the point of harvest.
Yes, yes,
So
yes.
it's not
Net
just
realizable.
it's not just fair value. So let me just say it's the net realizable value. It's fair value less the cost to sell, less cost to sell, or the net realizable value at that date. Okay, that's good. So how do we get that? We'll bring our fair value. We're giving per box to be 1,800. We need to less the cost to sell. And what's the cost to sell in this question? That's your commission, the commission of 10%. So we need to less 10% of the commission from the 1,800. That means that we are accounting for 90% of the total figure. So it will be 90% on the 1,800. This will give us the amount, the fair value less cost to sell, or the net realizable value in this case. Now, when we are done, bear in mind we are looking for closing inventory for each case. So when we are done, we need to multiply by the number of boxes. We're told that 1,800 is per box. So we need to multiply by the number of boxes. And what are the number of boxes? That was the last sentence. It says that the ministry had 924 boxes of unsold tomatoes. So we multiply by 924. So what will be our answer for this? So it's going to be 90% times 1,800 times 924. What are you going to get?
1,496,880.
196, 880.
880. Yes, please.
Okay. So this will be our answer in this case. Doctor, your hand is up.
No, sorry. It was up already. I'll just turn it down.
Okay. Is there a question on this? Okay, there's no question. Move on to our next question, question 2A. So Arita, please go ahead.
The following costs were incurred in 2016 in the design and construction of a new office building over a 10-month period during 2016. Feasible study, architecture fees, site clearance by external demolition professionals, construction materials, cost of own inventories used in the construction, net realizable value if sold outside the company 24,000, external construction staff salaries during the period of construction, external construction costs, income from renting out parts of site as storage depot during early phase of construction. Required. In accordance with Ipsas 17 Property, Plant and Equipment, calculate the amount that should be capitalized as property in the financial statement for the year ended 31st December 2016.
Okay. So yeah, we know the standard here to be Ipsas 17. So we know the standard here to be Ipsas 17. So this deals with costs. So let's do a recap on that. So cost. So the components that makes up cost is the purchase price. So we said it's a purchase price plus the directly attributable cost plus removal or dismantling cost? So these are the three components of cost we have. We have the purchase price of the assets. We have directly attributable cost. We have removal or dismantling cost. So see, whenever you're considering the cost of an item or PPE, we consider these. So let's check the ones we have there, and let's see whether we are going to include them or we are not going to include it. So let's start with the first one, feasibility study. Should we consider that?
No,
Feasibility
please.
study. Raise up your hand next time. Why no?
Yes, please.
So someone said no. I was asking why.
Please, it's not part of the attributable cost.
It's not part of the attributable
Direct.
cost.
It's not part of the direct attributable cost.
Okay, that's your viewpoint. Yeah, Christian, your hand is up.
It's a research expense.
It's a research
Expense.
I didn't hear you. It's a research expense. So therefore,
You won't consider it.
you won't consider it. Okay. So you're also supporting what she said. It's a research expense. So you're not going to consider it. Okay, you are correct. So you're not going to consider this one. So if you have to do this, you're not going to consider that as part of the cost of the assets. So that's correct. Next one is architect fees. Are you going to consider architect fees? Yeah, question your hand is up.
Yes, please. It's a consultancy expense.
So we are going to consider that.
Yes.
So bring the architect's fees. That is 100. So consider that 100. Next one, site clearance by external demolition professionals. Are we going to consider that or otherwise? iPhone, your hand is up.
Yes, please. We'll consider it.
We'll consider it. Why?
It's part of the cost of the assets.
Why is
It's
it part of the cost of the assets?
also before you construct, you have to do the clearance. So
Exactly. So it's part of the directly attributable cost,
yes.
right? So we'll bring that site clearance. So that is 80. Next we have is construction materials. 600. Are you going to consider that?
Yes, please.
Let me see the hands up. Dorcas, your hand is up. Go ahead.
Yes, please. It will be considered as part of the cost.
Why?
Because that's the purchase cost, the raw materials used in.
Exactly. Raw materials used. So that's the purchase cost. Okay. Next, let's go to cost of own inventory used in the construction. Are you going to consider it?
Yes, please.
Okay. If you are going to consider it, what is going to be the amount? So the cost is 30, and then written in bracket here that the net realizable value, if sold to an outside company, will be 24,000. So which value are you supposed to use in this case?
24,000.
24,000. Why?
Because that's the next realizable.
And so why are you not going for the cost, but you're going for the net realizable value?
Lower of cost.
Yeah, so because of the measurement rule, lower of cost and net realizable value. So yeah, the inventory that was used in the construction, the value you should use should be the 24 rather instead of the 30, which was the cost. So we come here, the inventory used in construction. Yeah, will be the 24. With the 24. Then move on to next internal construction staff salaries during the period of construction. Should we consider that?
No.
Yes.
Okay, I like the interesting this one I'm getting. But next time, raise up your hand if I've forgotten the rule. Yeah, so Kwesi, you started with the no. Why? Why saying no?
It's not a relevant cost.
It's not a relevant because your staff, people who work for you are not relevant. Wow. So this one there are some costs there.
No, because whether we construct or you don't construct, we will still pay them.
Eh. So it's not relevant to the construction. Okay. That's his viewpoint. iPhone, how are you?
It is.
You initially said yes. So why?
Yes. Yeah, I said yes. It's relevant in a sense that that is the labor cost. That is when they started the construction, these are the people that work to make the construction complete. So you have to pay them. It's a labor.
Yeah. So that is a labor cost. So she's saying it's a labor cost. Labor. Kwesi, has your mind changed?
No,
The mind has still not changed. Hey, my people, please convince Kwesi for me. Transport, yeah, your hand is up.
Okay, sir. So we consider it because they are directly attributed to the construction of the asset. So this is internal construction staff. That means they are the ones constructing the asset. That's why we add it to the cost of the asset.
Kwesi, you get it? So
Exactly. Exactly.
yes, please. Yes, please.
you're now fine, right?
Yes, I am.
Okay. So yeah, it's right. We are going to consider the 360. As Transfer Riley said, it's a directly attributable cost. Without that, you can't build. Without you incurring that cost, you won't be able to build. So it's a relevant cost to the construction. Don't bring relevant costing. Relevant costing is for decision making. Oh, that one is for decision making.
Okay.
Yeah, yeah, we are looking at it from the building perspective. So construction staff salary. Yeah, iPhone, your hand is still up.
Oh no.
Yeah. Okay. So yeah, it's 360. Okay. Next one, external contractor costs. Yeah, Chrissy, your hand is up.
You will consider it
Why?
because they are the one building the external contractor. They are the ones who are starting.
So it's also a directly attributable cost to your construction, the labor cost. So you also consider that. So that's 2,400. And the next one we have here is income from renting out part of the site as storage depot during early phase of construction. We had an income of 12. Should we consider this? Should we consider this?
No,
Okay, Kwesi, your hand was up. Okay. Why are you saying no?
I think it's not part of the construction cost.
It's not part of the construction cost. Okay. Now, yes, you are right. This is an income, and then according to the standard, it was in the past we used to account for this. But according to the standard, it says that when you get an income, even though it's directly traceable to your construction, maybe your construction, you still don't have to account for it. You still have to account for it separately as revenue. So you don't account for it over here. You account for it as revenue under IPSA 47. I hope you are aware of the new standard for revenue. So IPSA 47. So you use IPSA 47 to account for that. So it's not going to come here. So it means that in this question we are done. In this case, with some and half. So this becomes the cost of the assets. This becomes the cost of the asset. So we are done with this question. Is there a question on that? So we are done with the A. Can we move on to B? Okay, so let's move on to B.
B. The Ministry of
I'm
the
coming.
Ministry,
Question your hand is up. Okay, go ahead.
B. The Ministry of Ingenious Enterprise has been charged to collect legacy fixed assets data and value them in accordance with international public sector accounting standards into bracket Ipsas. The Fixed Assets Coordinating Unit of the ministry has collected for valuation of the following data for your action. The ministry owns a 4-year story office administration block. The average cost per block is 4,741,256.25 pesos. The building was constructed on a land size of 20 blocks of land owned by the ministry. Currently, a plot of land in that area costs 2,500,000. The FACU has measured the size of the building as follows: length at 87.5 meters, width 42.65 meters. FACU intends to apply a reference price per square meter of 432,000 to the area of measurement in order to determine the value of the asset. However, a professional body, the Institute of Architecture and Engineers, has given the reference price for cost of such office building at an estimated price of 87,965,025. The building has not seen any further facelift after since. However, a fence wall with a gate to enforce security and secure the land has just been completed in the current year at a cost of 8,970,000 with a land span of 50 years. The year of construction of the office building could not be determined, yet an old watchman who had been there for ages remembers that the building was constructed some 42 years ago, a time when his seventh child was born. It is a decision of Government of Ghana on adoption of Ipsas not to take advantage of the third-year exemption period, but account for legacy fixed assets by taking 60% of the reference cost of the legacy assets as the deemed cost, with reduced lifespan to 30 years. Required. Calculate the cost of the land and buildings with structures to be brought into the books on adoption of Ipsas and determine the depreciation chargeable in the first year in respect of these assets. II. Show the extract of statement of financial position of the Ministry of Ingenious Enterprise as at that date.
Okay, so this is the question we have. So this is the past question actually on Ipsas 17. So how are we going to go about it? So I is asking us for the cost of land and building. So you do it separately. In that regard, let me look at the question number. So we have question 2B. This was question 2A. So question 2B. Okay, so let's start with the land. How do we get a land in this question? How do we get the value of the land in this question? How do we get the value of the land in this question? Yeah, Collins.
Okay, so the value of the land will be equal to the 20 plot times the cost, the area, the cost, that's 2.5 million, which is the current plot of land in the area. Thank you.
So yeah, we know the number of plots, right? We have how many plots? 20 plots of land, right? And they have given us the cost per plot to be 2.5 million. So we do that area, right? So that's how you get a land. It's going to be the cost per plot times the number of plots. So the cost per plot is 2.5 million times the number of plots is 10 plots. So yeah, what do we get? We get 25 million, right? We get 25 million. So that's the land. And we go to the building. How do we get a building? Yeah, rounds for the hand is up.
So please, the plots, is it not 20 plots?
Is it?
Is it 20 plots or 10 plots?
It's 20.
Hey, 20. Oh, sorry. 20 plots. So when you multiply, what do we get? Should be 50 or
Yeah, 50 million.
50 million. Okay, thank you for the correction. Let's come to the building. How do we get a building? Yeah, rounds what?
Okay, so sir, for the building, we use the one that has been determined by the professional body, the value that the professional body valued
Rounds for
the
you
building.
intentionally went straight to you have solved this question in class. Yeah. Okay, that's fine. So we have one by the professional body. Maybe someone was taking this question for the first time. So we have several values we can use for the building. We have one by the professional body. So let me bring the value here since he has mentioned that first. So the professional body one, that's the Institute of Architects and Engineers. You have given us an estimate to be 87,965. So let me bring that 87,965 and 25. So this is by the professional body. Then we also can estimate that using the floor cost, right? We have been given the average cost per floor to be this. And then we know the number of floors. We said 4. Yeah, so we can use the floor estimate. So we can use the floor estimate to do that. So that will just be, the cost here will just be the cost per floor then times the number of floors. Okay, so we bring the costs per floor, which is 4, and cost per floor, which is 4741. So 4741. And then we have 25256.25 times the number of floors, which is 4. What do we get?
Yeah, the same as the professional body.
We had what?
The same figures as the professional body. 87
I,
million
are you sure?
So we had
No, I'm getting 18 million
18 million.
Yeah, you don't get it. You don't get the
965.
same thing now.
18,
18,
80 million, 965,
965,000.
25
Yes,
city.
95.
and 25 like this.
Yes, please.
Okay. So that's if we use the floor to estimate for that. Then we're told that the fixed asset coordinating unit, that's the FACU, have also given us a way to calculate for the building. They have given us the sizes of the building, meaning they have given us the length, they have given us the width, and then they have given us the reference price per square meter to be 4432. So we can use that to also estimate for it. So the fixed assets coordinating units have given us the cost. And use the floor area. I say floor area, the square meters, and multiply by the number of the cost per square meters, which has been given to us. So the cost here will be the square meters here. How do we get the square meters? It's length times width. So we just do length times width to get the answer. So the length here is 87.5 meters times the width, which is 42.65, 42.65 meters. Then multiply by the cost per square meters. The cost here is 4432 in that regard. So 4432. So what becomes our resultant answer?
16 million
50,
539.
50
16.
million.
16.
Okay.
539,000 and
39,670.
670.
So these are the estimates we have. We have one by the professional body, one using the floor estimate, and we're using the fixed asset coordinating unit. The question will be, which one are we going to go for? The standard will tell you that you use the best judgment in this case. And yeah, the best judgment will be that you have to go for the professional body because they have been certified and then they know the actual deal. Yeah, so that's why Ransford went straight forward to say we should go for this. So our value of our building will be the 87965 and 25 and 25. So that will be the value of our building in this case. That will be the value of our building in this case. But yeah, the question made an interesting statement getting to the end. If not for that, that would have been the value we'll have used. But the question said that it spoke the last sentence. Whether the last sentence was just about the building or just about the building. But I read just the last sentence, get to the last sentence. If you account for the legacy fixed asset, which the building is considered as such, by taking 60% of the reference cost as the deemed cost. So they are adopting Ipsas for the first time, and they are saying that use the deemed cost. And here the deemed cost here, we have been told that we should take 60% of the reference cost as a deemed cost. So for us to get the actual value of building, yeah, we need to pick 60% of the value. So you don't end there because of the additional information they gave. You have to take 60% of the value. And what are you going to get in that regard?
2 million.
52 million,
779,000
mm-hmm.
and 15.
And
And
15.
15.
So this will be the actual value of the building. Then let's amalgamate these ones, the cost of land and building together. We're having fence wall, so I'll add a fence wall here. So we had land value. The land was the one we got at first, 50 million. So we bring that 50 million here. We have estimated that of a building to be 52,779,015. And then we're given a fence wall. For the fence wall, we're given a value straightforward, so we don't have to worry ahead with that. So fence wall. The value we're giving for the fence wall is this value. So if we read, it's a fence wall, the gate, blah blah blah. So this is the value 8,970,000. So we're at 8,970,000. When we are done, you sum all of them to get your value of your land and building in totality.
$111 million. Okay.
So this becomes the value of our land and building. So that's for I. That's what I is telling us to do. So this is the information for I. Move on to II. So for II, we need to get our depreciation and get the carrying amount of our land and building. Number one, you know that land, we're not going to depreciate this, right? So let me bring the value here, initial value here. Then we calculate for depreciation. Then we get the closing value in this case. Now we know that depreciation, we're not going to depreciate, so that will be 0. So the closing value will still be the same amount in this case. The next we have is building. So building, we need to get the useful life of the assets. So getting to the tail end, they give us the information that the building now has a reduced lifespan. And now we have to use 30 years. So we need to use 30 years to account for the depreciation. So that will be this value we have here. We divide by 30 years. And this value becomes the depreciation we use. We subtract that from the initial value to get a closing value in that case. So we'll pick the initial value, less the depreciation to get a closing value. To get a closing value in that case, then we come to the fence wall. The fence wall, we're given a useful life of the fence wall. They say with a lifespan of 50 years. So we are going to use 50 years for the fence wall. So the fence wall one will be this value divisible by 50 years. And this will be the resultant answer for that. You also subtract to get a closing value. You subtract to get a closing value. We can choose to add them to get their total. Then the depreciation to let's find a total. Then a depreciation to less. So this will be our answer. And I will do the presentation. So the presentation, we need to prepare statements of financial performance for the year ended. So we are preparing it for the year ended. Let me see the year. Did they write a year? Okay, yeah, they didn't give us a year. So to be just a year ended. Let me just leave it that way. But the name of the firm must come Ministry of today's Ministry of Indigenous Enterprise. Indigenous. Enterprise. We bring our currency sign. So yeah, what we are going to account for will be the depreciation. Depreciation is an expense, so we bring that in our case and bring negative. And next will be the statement of financial position. As at year end. As at year end. And then you will bring in non-current assets, PPE. So what we had here, with the value we bring in that regard, and we are done. Yeah, is it BA bar your hand is up?
Please, was the depreciation charged for the full year?
We're not giving dates. We're not even giving dates. So how will you know whether it was for half year or full year? We're not giving dates. And whenever you're not giving, just assume 1 year.
Okay.
Yeah. Any other question? Go ahead. But your hand is down. Okay. Linda, go ahead.
So I thought that I wanted to ask, do we have to find the other alternatives before we take?
Yes. You have to find it and tell us the professional body. Why you're picking the professional body.
Okay. Thank you.
Okay. You and me will not be there when you're marked, so be safe. Do everything. Yeah. So that's that. Let's go to question 3. By your honest up. Is it from the old one or you have a question?
It's the old one, sir.
Okay. Let's go to question 3. Read up.
Okay, question 3. On 1st September 2020, 15 billion was spent in acquiring motor vehicle to boost government projects. However, this transaction was included in the account as goods and services in the year 2020. Motor vehicle has a useful life of 15 years. The current accounting period ends on 31st December 2021, and this error has since not been required. In accordance with Ipsas 3, accounting policy changes in accounting estimates and errors. I. Prepare extract of financial statements for 31st December 2021 to account for the above transaction. II. Explain 2 guiding principles for formulating accounting policy. III. Explain 2 Explain two conditions that mandate a change in accounting policy. Ivan, explain the treatment of changes in accounting policy.
Okay, thank you. Now, this question is on Ipsa 3. Before we go to the extract, let's do the little theory we have here. Explain the two guiding principles for formulating accounting policies. So, what are the two guiding principles? Whose hand is up? But your hand is still up. Is it the old one or this one is a new one? Okay,
The
sun is
old
down
one.
now.
Yeah.
Okay, so explain two guiding principles. Anyone? For formulating accounting policies. Yeah, Dorcas.
It should be required by the Ipsas. The requirements by Ipsas.
Incorrect. We see a boy. Go ahead. We see a boy.
It should be relevant to decision.
Relevant to decision making. Okay, that's correct. Another person should give us a second one.
Reliable.
Reliable. Reliable. Reliable. So yeah, you can see here, say explain two guiding principles for formulating. So yeah, in case you see 2 marks, I hope you not just say relevant to decision making and then reliable. And then the examiner will give you what the 2 marks, right? I hope you know that. I'm just letting you know what people do in the exams. So we don't do that early and leave there. You have to explain. As I told you, even if you don't have anything to say, just write one sentence explanation. If the marks is too small and you think you don't have much time. Okay, so these are the two guiding principles: relevant and then reliable. Relevant to decision making and accountability, and then reliable. And we say it's reliable when it has the traits. And I hope you remember the traits for reliable: faithful representation, the neutral, prudent, and the others. Okay, let's go to the second one. Explain two conditions that mandate a change in accounting policy. So this was the one that the lady was talking about.
Mm.
Was it Dorcas? Dorcas, you can come and give me your answer. So explain two conditions that mandate a change in accounting policy. Yeah, Helen, your hand is up. Go ahead.
First one is if it's mandatory, if it's required by Ipsas.
So if it is required by another Ipsas. So whereby another Ipsa,
Okay.
yeah. So whereby another Ipsa comes to replace an old Ipsa. Like for instance, I told you we have an Ipsa for revenue, which is Ipsa 47. It's replacing the Ipsa that we had for revenue in the past. That was a exchange transaction and non-exchange transaction. Ipsa 9, Ipsa 23. So Ipsa 9 and 23 doesn't exist anymore. You should know that it doesn't exist anymore. Ipsa 47 is in force. I think it started this year, right? Yeah, the effective date I think was this year. So it started this year. So from this year, we are using Ipsa 47 for revenue. We are not using Ipsa 9 and Ipsa 23. So when there is a new Ipsa, it will mandate a change in accounting policy, meaning that how you used to do things in the past will change. So that's one. Which other one can we talk about? Hmm. Which other one can we talk about? Yeah, Ransford.
Okay, sir. So when the change will make the financial information more reliable and relevant to the
So
user.
when a change will make the financial statements reliable and more relevant, right? For decision making purpose. Okay, and accountability. That's true. That's true. Okay, let's come to Ivan. So you should explain the treatment of changes in accounting policy. Explain the treatment in accounting policy. What are the treatments in accounting policy we have? They can be grouped under four major areas. What are they? So let's start with the fair. Some of them, the ones you know. Then what are the ones you know? Okay, I can see some hands up. Gifty Samuel.
Okay, so sir, please, if the change is required by Ipsas, you follow the pronouncement transition requirements.
Okay, the transition guidelines in that new Ipsas. That's correct. That's good. What else? A different person? What else? I think I saw Helen.
Yes, sir.
Oh, your
We
hand
can
is down
also
now.
use the
Uh,
we can also
okay,
use
go ahead.
the cumulative
Yeah, we can use a cumulative
the
what?
cumulative effect of changes
The
in
cumulative effect
net assets and equity. Yes.
or equity. So we can look for the cumulative effect. But before you do cumulative effect, what should you do first? And if that thing is not done before you go to cumulative effect, I think let's look at that one first. What
Okay.
should we do
We we,
when?
we should we sh we should account for it using the prior year adjustments. So if the prior year adjustment is not available, then we use the cumulative
So
effects.
how do we call that prior year adjustment you are referring to? What's the name? I want the technical name. Faustina.
Hmm.
So if the change is voluntary, we apply the change retrospectively by stating prior periods.
Exactly. So I was looking for the retrospectively. Yeah, so retrospective by stating prior periods. That's correct. And then if retrospective application is not possible, then what do? We do the cumulative effect. So that's what Ellen said. We do the cumulative effect. Okay. So that's the third one. And then we are left with the last one. So what's the last thing? If cumulative effect is not possible, what do you do? Okay, Ransford, your hand is up first. Go ahead.
Okay, so sir, if the cumulative effect or requirement is not possible, then we apply the new change prospectively in the current year.
Okay. If the cumulative effect cannot be done, then you apply the change from the current year. That's prospectively from the current year. Well done. These are the four things you do to get all the marks in that regard. Let's come to I. I says we should prepare extracts for a financial statement to account for the above. So let's check the type that we have here. Let's check in this question. Is it accounting policy? Is it a change in accounting estimate or is it an error? So let's check. Is there a change in accounting policy? Is there a change in an estimate or is it an error? The one we have here in our question.
An error.
It's an error. Yes, you're right. It's an error. Next time, raise up your hand. So it's an error. So yeah, the error was 15 million. They recorded 15 million, which was a motor vehicle, as an expense, as goods and services within the year. How do we correct or how do we rectify this error? Now, to rectify this error, we said for prior period, you need to for errors, you need to check whether the error relates to this year or relates to previous year. So let's check whether it relates to this year or previous year. The error occurred on 1st September 2020 and was our current accounting period. Our current accounting period told is 31st December 2021. So you can clearly see that this relates to prior period, prior period, prior period. So since it's prior period, how do we go about it? Anyone to share his thoughts? How are we going to account for this error? If it's prior period, how are you going to go about it?
The prior period sorry.
Yeah, just your hand is up. Go ahead.
The change will be done retrospectively.
A change will be done retrospectively. Okay, we call that retrospective reinstatement. That's good. So we do the change retrospectively. In this case, when we say retrospectively, what are we going to do? Yeah, Ellen.
We have to adjust the prior period
So you have to adjust the prior period figures. So which prior period here
yes.
would the error relate to? Which prior period here would the error relate to? Yeah, big man.
Okay, sir. So this will have impact on our retained earnings or our prior year profit.
Prior year profit. We are in public sector, so we don't call it retained earnings. What do we call it?
So we have to go back and work for depreciation.
Yeah, you said retained earnings, and I'm saying we
We,
don't
we
call it
call it,
retained earnings yet.
is it
So how do we call it
surplus?
in public sector? Say it for. You're not saying it for. Ransford, you understand?
Accumulated fund.
I said accumulated fund.
Accumulated fund. So you adjust this to your accumulated fund. So in your statement of net assets, accumulated fund is in your statement of net assets. So statement of net assets, what in FR they call statement of changes in equity. That will be statement of net assets. We have one column we call accumulated fund. So let me just go straight and say I'll have to do an adjustment to my accumulated fund. Now, in doing the adjustment, the usual thing you have done if you're doing a full account was, let me bring there are a number of roundings. So let me check the 15 billion. So let me bring million on top so that it becomes easier. So yeah, the first thing you do is to bring your opening balance brought down. But we're not giving balance brought down, so you don't have anything to come here. But ideally, if you're doing the final accounts, you need to bring your balance brought down. You need to correct the error. Then you get a restated balance. So yeah, how do we correct the error to the balance, the accumulated fund balance? How do we correct the error to it? Are we going to add or are we going to subtract? Yeah, Ransford, your hand is up.
So we have to add it at the value of the.
Why are we adding? Why are we not subtracting but rather adding?
Because it was treated as an expense which was subtracted from the profit to get to the accumulated fund. So we need to add it back as an EP.
It's undermined or it reduced your profit, your surplus or deficits, right? It reduced your surplus for the year. So if you are correcting it, we need to add back to correct that. So that's true. So the motor vehicle cost, we need to add back. We need to add back. That was a 15 million. So this million on top, so that will be 15,000. We need to add back. And don't forget, since we are adding back the whole amount, we need to account for depreciation on it. So yeah, we'll bring the 50 million. We look for the useful life. We're giving a useful life of the assets with 15 years. So that will be 15,000 divisible by 15 years. And then we need to take the period involved. What is the period involved? This was on 1st September 2020 to the end of the year. So remember, we are doing prior year. So our mind is on 2020 now. We'll come to 2021. We have not gotten to 2021 yet. So from 1st September 2020 to 31st December 2020, what is the period involved in that case? Yeah, answer.
4 months.
4 months. So September, October, November, December. Yeah, that's 4 months. So yeah, the answer we have here, we need to multiply by what? 4 out of 12. What are you going to get?
400.
We'll get 400. Then the next thing we do is we check, are we going to add the depreciation or subtract the depreciation? Okay, one hand up transport.
So we need to subtract it from the cost of
We
the
are going to subtract. So we subtract it in this case. So this is how you usually do it when you're doing the final account and you have an adjustment in this case. But yeah, we are doing extra. So let me just leave it here. Let me delete him in the opening balance here and just leave it like this. So this is what you do in your statement of accumulated fund as for the extracts. We'll do statement of accumulated fund in that regard. Let me see. Are we giving the name of the entity? We're not giving the name of an entity. So yeah, we'll just do statements of accumulated fund. Then next we need to do our current year. So current year, we need to account for statement of financial performance. At the year end, this one will be at 31st December 2021. So when we come to 2021, bear in mind that we need to account for depreciation for this asset. Remember, in 2020, we have done the correction of errors. So now it's part of our assets. This asset means we need to calculate for depreciation for the year. And yeah, bear in mind, this one will be 1 year depreciation, not the 4 months. The 4 months was for 2020. We are doing 2021. So we need to bring 1 year depreciation for it. So that will be 15,000 divided by 15. That will give us 1,000. This is an expense, so we show it as negative. And in this case, then we come to position. Statement of financial position. 31st December 2021. And then here, the extracts, you are going to show the non-current assets value that we have. That's PPE. Yeah, the non-current assets will show the current amount, which is 15,000 minus. The first year we deducted 400. 2021 we deducted 1,000. So that will be 14 minus 400. That will be 13,600 in that case. Questions on this? Questions on this? Yeah, Linda, you want this up? Yeah, Linda, you want this up? Okay. Think maybe Linda doesn't have a question. So this is how we go about with this question, where you have a correction of error in that case. Okay, let's move on to the next question. Question 4. I read that question 4.
Okay, question 4. The Ministry of Roads and Highway decided to construct a tunnel that will link two sides of the village that were separated by the spillage of Akosombo Dam in 2023. The tunnel will take 2 years to build, and the total capital outlay needed for the construction would not be less than 200 million. The ministry borrowed 220 million from three sources and used the extra 20 million for routine road maintenance. Financing was arranged as follows: bank term loans, 50 million at 70% per annum; institutional borrowings, 70 million at 8% per annum; corporate bonds, 100 million at 9% per annum. In the first phase of the construction of the tunnel, the ministry placed some of the borrowed funds in a temporary investment for a period of 6 months. Income from these investments was 5 million required. Show how the Ministry of Roads and Highways will account for this borrowing cost in accordance with Ipsas 5 under each of the following policy options: A. Benchmark treatment option; B. Alternative treatment option.
Okay, so this is on Ipsa 5 borrowing costs. So for borrowing costs, how do we go about borrowing costs? You have to know the method you are using, right? So in public sector, this is different from FR. In public sector, you need to know the
Yeah, but
method you
this
are
looks
using. Whether
very similar to FR. This question, I think, is even in FR.
this question we did what?
I think I said it's very similar to FR. This question is even in FR.
Similarities, yes, but it's not the
Yeah.
same.
Okay.
It's not the same, yeah. So yeah, benchmark treatment approach. So with a benchmark treatment approach, what do we mean by that? So in public sector, when we say benchmark treatment approach, it means that all your borrowing costs will be expensed. That's what it means. You're not going to capitalize any of your borrowing costs. You expense everything, whether it relates to a qualifying asset or whether it doesn't relate to it. Once you use the benchmark treatment approach, you expense the whole borrowing cost. You expense the whole borrowing cost. So in this case, let's start with the A, question 4. Let's look for the borrowing costs in each case, and then we expense all of them. So we are doing A, which is the benchmark approach. Yes. So yeah, we have 3 loans here. Bank term loans. The interest here is 7%. We calculate for that. So the bank one is 7% on 50 million. So 7% on 50 million. What do we get?
0.5 million.
0.5.
0.5 million.
Okay, we go to institutional borrowings.
3.5.
0.5 million.
3.5. Okay, we go to institutional borrowings, which is 8% on 70 million. So 8% on 70 million. What do we get?
5.6 million.
5.6 million. Then we go to the last one, corporate bonds, which is 100 million times 9%. So corporate
9 million.
100 times 9%. And that will be 9 million. Okay. So we sum these three together. So we get 18.1. So you indicate that this will be expense. You take this one as expense. In public sector, what type of expense is this? This is your interest. Let me see. The NC deals with Ministry of Roads. So this is a covered entity. So you treat this one as interest. You know the expenditure. One of the items you have is interest. You take it there, 18.1 million in that regard. We are done for the benchmark approach. That's all. But the B is asking us to do the alternative treatment approach. And this, the one which is synonymous to FR, this is what is same to FR. So with the alternative treatment approach, that one you are supposed to capitalize the borrowing cost that relates to the qualifying asset. And the aspect that does not relate to, you expense it. How are you going to know the one to capitalize and one not to capitalize? You first have to identify whether it's specific borrowing or it's general borrowing. So let's join the question. Do we have specific borrowing or we have general borrowing? Specific or general? Yeah, Ransford, your hand is up. Go ahead.
Say it's a specific borrowing.
Why specific? Why not general?
Because it's specific because it's to construct a tunnel, an asset, specifically for an asset, but not for any general
Exactly.
expenditure.
Exactly. They said they use construct the tunnel. Yeah. So this is specific borrowing. They went for it specifically for the construction. But bear in mind, it wasn't all the amount that was used, right? Let's add all the loans together. 50, 70, 100. How much are we going to get? 50, 70, 100.
See.
Yeah, Zoom user.
220.
We'll get what?
220 million.
220 million. That's correct. So they told us that we borrowed 220, which we have confirmed by adding the three. We borrowed 220 from three sources, which we have confirmed. But they say we use the extra 20 million. So what's the extra 20 million? That's the 220, 20 million of it was used for what? Road maintenance. And how much was used for the tunnel? They even mentioned it here that the tunnel, the construction will not be less than 200,000, meaning that the maximum figure for that will be 200,000. And you borrowed 220, and you're saying that you use 200 for the construction and 200 for what? Routine road maintenance. Road maintenance is not a qualifying answer. You know maintenance, right? Maintenance is a normal expense. So you should bear in mind that, yeah, although it relates to qualifying assets, yeah, it's not all of it that relates to it. It's not all of it that relates to it. So you need to do apportionment in this case to get the one that relates to. But before you even zoom into this, let's go to some specific formulas. Let's look at specific borrowing. How do we get the borrowing costs? Let me touch from there. So alternative approach. So specific borrowing, how do we get the borrowing costs? We say to get borrowing costs here. Does anyone remember? How do you get a borrowing cost? Okay. So to get a borrowing cost here, to be a okay, Apisi, Johannes, go ahead. Yeah, Kwesi, Johannes up.
So the borrowing cost minus any interest that was invested.
Okay, all right. So that would be the actual borrowing costs incurred. Then you less any investments income. Any investment income. So in this question, we need to get an actual borrowing cost incurred. That's the first thing we need to do. And to get the actual borrowing cost incurred here, we need to do apportionment. Not all of the interest or loan relates to the qualifying asset. It's only 200 million of it that relates to it. So yeah, you know the loan value. The total loan value was 220 million. We know the borrowing cost for that. We have even calculated that over here. That's the 18.1 we had. That one's for the whole thing. 18.1. But we are not accounting for the whole thing. We are accounting for only 200 million. So we do ratio and proportion. How do we get just for the 200 million? So to do that, to be 200 million divided by the totality of it, that's the 220 million. Then we are all sharing the 18.1 million. So the actual borrowing cost will be equal to, what will be the answer?
This is 16.45.
Okay, what?
16.5.
16.45 million. Yeah, then we now calculate for the borrowing cost to capitalize. So borrowing cost to capitalize will be equal to 16.45 million minus the investment income. Yeah, we're checking the question we're given. Say income from investment was 5 million. So we're giving that as 5 million. We less that. What do we get?
11.45.
11.45 million. So this becomes the borrowing cost to capitalize. Well, what about the borrowing cost to expense? So if you want to know the aspect you're expensing, we know the total borrowing cost. We know the total borrowing cost to be the 18.1 million. We know the one we have capitalized, which was the 16. Out of the 18, we got 16. So the 16.45 million. What will be the value that we expense? Question on is up. Okay, different person. I think question is not ready.
Yeah.
Your answer.
1.65 million.
1.65 million. So this is the one that relates to the one you're supposed to expense. Now, if I ask you to calculate for the cost of the tunnel, if you had to, question was to go further, I ask you for the cost of the tunnel. How are you going to get the cost of the tunnel? Yeah, Ransford.
Okay, so it's going to be the 200 million plus the borrowing cost. The one that
The
we
borrowing cost to
capitalize,
capitalize.
that's
That's good. That's good. So it's been a 200 million plus the borrowing cost to capitalize, which was at 11.45 million. What will be our resultant answer? That will be 211.45 million. So if the question asks us for the cost of the tunnel now, the cost of the facility now, this will have been the answer. Questions on this? Okay, let's make headway with the next one. Question 5. Arida, are you around?
Yeah, I'm here.
Yeah, go ahead. Question 5.
Question 5. Ghana Highway Authority prepares its financial statement in accordance with International Public Sector Accounting Standards (Ipsas). The Government of Ghana has approved the sum of 678,000 to the Ghana Highway Authority for the construction of a qualifying infrastructural asset. The following costs were incurred during the construction of the asset. I. The sector minister in the process recommended his brother as a consultant to conduct feasibility analysis on the construction of the asset. The consultant charged the authority the sum of 350,000. II. An installation of platforms to enable the project to be undertaken were designed and built at a cost of 225,900. III. Some foreign elements of the service required that letter of credit was processed to enable execution of the project, and the legal fees charged was 275,000. IV. Importation of specific components. Importation of specific components from Germany to execute the project in question cost the authority €58,892. V. Haulage and freight charges was €5,725. Cleaning and engine oil for first testing of equipment at the project site amounted to 19,430. IV. VII. The cost of warranty at the asset was €3,400 should the authority take advantage of the warranty agreement. VIII. Delivery, handling, and other overhead amounted to 156,800, out of which 60% were attributable. IX. The Ghana Highway Authority consequently consequently incurred cost of 398,560 in modification of an adjoining infrastructure to facilitate the project. The government of Ghana was not able to provide all the amount, hence, the Ministry of Finance gave approval to the Chief Executive Officer of the authority to borrow the excess amount from open markets, which a financial institution provided. Please, I'm coming. At a commercial rate of 35,000 per annum. Government of Ghana accounting policy adopts the allowed alternative approach of borrowing cost under Ipsas 5 borrowing cost. A check from the professional side of the Institute of Architects and Engineer in Ghana indicates that the following fee that can be charged under the service rendered by the consultant could cost only 195,000. To the extent that the funds borrowed was not GOG funds, and the fact that the funds would be required after 100 days to pay for the cost of the assets, which was provided earlier than envisaged. The CEO took advantage of the 14 weeks grace period for payments and invested the funds in a 91-day investment, which yielded a return of 94.09% per annum at first maturity when the funds were held in anticipation of payment. The prevailing exchange rate at the date of contract was 13.5 pesos to 1 cedis euro. However, on the day of payment, the exchange rate shot up to 15.57 to 1 euro. Required. Explain what is meant by a qualifying asset. II. Determine the cost of a qualifying asset for capitalization.
Okay, thank you, Rita. So, person I'll ask you is what standard does this question relate to? So, this is a past question. What standard does it relate to? What standard does it relate to? Yeah, Kobe.
Ipsas 11. Construction contract.
Ipsas
11.
Incorrect.
Yeah.
Yeah, Helen.
Guys, PPE and borrowing cost.
PPE, which is Ipsas 17 and borrowing cost.
17 yes.
Ipsas 5. Okay. So it's 17 and 5, rather. Okay. So yeah, what are we supposed to do? You're supposed to determine the cost of the building, the cost of the assets, basically, which is under IS IPSA 17. So we'll go straight here. This is question number 5. So yeah, we are looking at the cost over here. So we need to bring the items. We need to bring Ghana City on top here. Then we'll check the item one by one. And then we'll check whether we are supposed to bring it. So we'll start with I. Says the sector minister recommended his brother as a consultant to conduct feasibility analysis on the construction of the assets. The consultant charged the assembly the sum of 350. Are you going to consider this cost?
No.
Yes.
Why no? Ransford, you understand? Go ahead.
Because of the relationship.
Because of the relationship. Because of a relationship. Okay, so you're right. Because of a relationship, we shouldn't account for 350. So what should we account for? Should we not bring it at all?
Yeah, so say we shouldn't bring it, but we'll bring the one that's what's determined by the there was a determination made there, that was the 195,000.
Yeah, so this relates to related party, right? Related party transaction. That if it's a related party transaction, you have to check if it's a commercial price. And the question has given us that, I think, at the down here, what the actual price is. It was here. They said a check from the professional website of the Institute of Architects and Engineers in Ghana indicates that the professional fee that can be charged under the service rendered by the consultant would only cost 195. So yeah, you are only going to use 195 as a consultant's cost for the professional fee in this case. You're not supposed to use the total figure rather, but the 195 in this case. So that's for the first one. Move on to the second one. An installation of a platform to enable the project to be undertaken where designed and built at a cost of 225,900. Are you going to consider this installation cost?
Yes.
Your hand is not up, so yeah, answer.
So yes, we will consider that.
Yes, why?
So because it is a directly attributable cost to the
It's a
construction of the
directly attributable cost. So we bring the installation cost, which is 225,900. 225,900. We move to III. It says some foreign elements of the service required a letter of credit was proposed to process to enable execution of the project, and the legal fees in relation to that was 275. Are you going to consider this? Yep, that's what.
Yes, we will consider that too as part of the cost.
Why?
Because it's a legal fees. It's also a directly attributable cost to the
Initial direct cost. Okay, legal fees. That's 275,000. We move to the next one. Yeah, Ivy. It says importation of specific components from German to execute the project in question. That costs 58,890 euros. Are you going to consider that?
Yes,
Yes,
please.
someone's up. Let me check. Helen, yeah, Helen, go ahead.
Yes, sir, we are going to consider that as maybe like
I'm going to
a
consider
cost
why
of
should we
let's say
consider
for
it?
example, a cost of changing the component, effective component the
Okay, it's going to consider the purchase price, right? Of the component. So this one is in euros, so we need to convert to Ghana city. And here they gave us two rates to use. So my question will be, which one are we going to use? They say we should use 13 to 50 to $1. And there's another one which is 15.57 to $1. To €1. Which one are we using? Yeah, let me see. Big man. Yeah, go ahead. Big man, which one should we use?
So please, we use the closing rate. That is 15.57, 15 CDs 0.57 to 1 A.
Why that one?
I disagree.
Relax. Big man. Why?
Okay, sir, it is because okay, this is not amount we owe. So I think we use the 13.5%.
0.50. Oh, you're changing your mind right now.
Yes. I didn't read it well. I thought it was a debt.
Okay.
So now that we
Another
are
hand
not
is up.
owing, so we use the first rate. That
Okay. Another hand is up. Helen. You agree with him? Yeah. Ellen, are you there? Okay, let me move to the next person. Ransford, your hand is up.
Okay, so for me, what I understand is we use the 15.57 to €1
Why?
because in order to determine the cost of the assets is when the asset has been completed, right? So the assets to the date of payment to is after we make the payment after the asset has been completed or the reporting date, right? So we use the 15.57 to €1 to determine the cost that we are owing, and there will be an exchange difference that will affect us because we didn't pay it on the date of the contract, but we are paying it on the date of we have the payment exchange rate. So that's how I understand
Okay.
it.
Okay, that's fine. Another
Yes,
hand is up. Let me.
I agree with him
Oh, relax. Okay, why do you agree with him?
because we have not yet paid, but the date that we are paying, we must consider the date we are paying. That is when the interest rate shot up. So that's what we must pay. And we have a loss, and then it will be treated in the statement of financial performance.
Okay. I have other hands up. Linda, go ahead.
I disagree with them
Okay. Why you
because
disagree?
as at the date of the contract, it means that they agree that as at that time the amount was 13 cedis, 50 pesos per euro. So if you are paying and the amount has risen, then that will mean that that difference should be accounted for as exchange loss, not to be added to the cost. Because you've already agreed to pay it at 13 cedis, 50 pesos per euro. So that's what I think.
Okay. That's Linda's we talked to. Akwesi.
Um, I think the amount has already been pre-agreed already. So if it has been pre-agreed already, they have to use the 13.
You have to use the 13. Okay. Let me pick the last person. I think that was Eric. Eric.
Hello, sir.
Yeah, go ahead.
So I think I agree with the lady. We have to use the 13.5. And later, when we are going to pay, and we see that there's an increase in the rates, we treat the difference as value loss or something. I think we don't have to add the difference, the rate difference to the value of the asset. So we treat that one in what's the name, in the financial performance as a loss.
Okay.
Yes, have to add that.
Okay.
Please, can I add something?
Okay, add and let me conclude.
Well, I'm saying that an amount has been approved for you to use for the construction. So I'm thinking that all these have been factored inside already. So you can't go back and say, she can answer. The 13.
Yeah, so you agree we should use the 13, right?
Yeah, contract is a contract.
Exactly. A contract is a contract. Hey, my people are now doing law. Okay. So, as you all rightly said, the prevailing exchange rate was 13.5 to $1. But I said on a date that we intend to pay, it is 15.57. So we check, did they make any indication that about the payments? Did they tell us anything about the payments? The question, when we paid, they didn't make mention of any of that, right? All right. So since they didn't make mention of any of that, we just have to go with the prevailing exchange rate. So you use the prevailing exchange rate in this case, because that's the rate prevailing at the contract date. So that we can get a value in that regard. So yeah, the value for the importation of this one will be the 58, 890. You are going to pay it at that date using the prevailing exchange rate. So yeah, all right, we use the prevailing exchange rate rather, not the 15. Eric, your hand is still up. So the importation. So yeah, 58, 890 times 13.5. What are you going to get? Yeah, Eric.
795,015.
795,015. Okay. Then we come to the next one, which is the haulage and freight charges cost 5725. Are you going to consider this?
Yes, sir.
Okay. Which one are we going to? Which exchange rate are we going to? Are we also going to use 13 or 15?
13. 13.5.
Why should we use the 13?
Similar situation to the importation.
Okay. So on that date, the haulage and freight charges so here to bring it here. 5725 5725 times the rate, which was the 13.50. What do we get?
77,208.
77,287.5.
287.5.
Okay. Moving to the next one. VI. Cleaning an engine oil for the first testing of the equipment at the project amounted to 19,430. Are you going to consider this?
Yes.
Is your hand up?
Yes, please.
Yeah, Chrissy, go ahead.
Since it's the first time testing it, I think we will consider it.
Yeah, so the first time testing cost is considered. So we bring a testing cost. It's going to become part of it. That is a 19,430. Next is VII. Cost of warranty of the asset is 3,400. Should the authority take advantage of the warranty agreement? Are you going to consider this? Are you going to consider this?
Yes, please.
Yeah, Chrissy, why?
I think if we only take advantage of the warranty, we will do. If we don't, we won't.
Okay, Helen, your hand was also up. Do you agree with him?
I will not take it. It will not be part of the cost.
Why? Why
One
is it not part of the
one
cost?
is
So you're right, you're not going to take it. I agree with you. But why? 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 So this is a provision estimate. This is a provision estimate. Yeah. We cannot include that in the cost of the assets. So we're not going to bring that. Yeah. We move to vein III. Say delivery, handling, and other overhead amounted to 156,800, out of which 60 were attributable. So yeah, you can see clearly. They have told you the parts, there is some aspect of it that's attributable. So the attributable one is the one we are going to account for by. So attributable, delivery, handling, and then the others. Let me see. Delivery, handling, and other equipment. Yeah. So that one is 60%. We'll pick 60% of it and then multiply by 156,800. 156,800. What are you going to get?
94,080.
94,080. Okay. Some hands are up. Eric, go ahead.
Yeah, I wanted to answer the question, but it's fine.
Okay. Gracie. Okay. Let's make progress then. Go to IX. The Ghana Highway Authority incur cost of 398,560 in modification of the adjournment infrastructure to facilitate the project. I will compare it.
Yes.
Yes. Why? Your hand was your hand up. Your hand was not up. Helen, your hand was up. Go ahead.
I will add it.
Why?
Hello, sir.
Yeah,
It
why?
is an expense that will generate economic benefits. So we have to add it to the cost.
Okay. So this is what we call subsequent expenditure, right? If you remember.
Yes, sir.
Yeah, so this is a subsequent expenditure. So we need to include that. 398,560. So 398,560. So we are going to include that. Let me write the actual name. Yeah, it was adjournment, modification of adjournment. So modification of adjournments of infrastructure. Okay. Is that all? I think that was all. We sum them together. What are you going to get? Yeah, I've written the answer already. So this is the costs that we have incurred. Now, out of this cost, let's see how much we founded. We got from government supports. We say government approved 878 for this project. We're told over here that it wasn't all of them that was approved by the government. It wasn't all of them we got from the government. So yeah, the government of Ghana was not able to provide all the amounts. Hence, the Ministry of Finance gave approval to the Chief Executive Officer of Authority to borrow excess amounts. So if you want to get the amount that we borrowed, you have to subtract what the government gave to us. So how much did the government give to us? It gave us 678. So yeah, we need to less the government of Ghana funds to get the amount we borrowed. Government of Ghana gave us 678,000. Then we realize that in that regard. So this becomes the funds we borrowed. So this is the funds we borrowed. Then from this fund we borrowed, we can calculate for the borrowing cost on this. We can calculate for the borrowing cost on this. So if you are calculating for borrowing cost here, you already know the formula. You need to get the actual borrowing cost incurred. And to get that in our case, we need to get an interest rate. And the interest rate was given us 35%. So we pick the 35% here and multiply it on the figure, which was a 1,402,272.50. What are you going to get?
490,000. 490,000.
490,000.
And
That's all.
no, 795.4.
795.4.
So this is 38 and 375.
I'm not getting you.
I mean, the decimals is 375. So should I leave it in two decimal places or one?
Yeah, 2 decimal place. What will we get?
Okay, then 38.
38. Then we realize our investment income. We had an investment income in this question. Investment income was, we're told that we invested it at 24.09%. So we calculate for that too. 24.09% on the figure, which is 1420272.50. What do we get?
Learning borrowing cost.
Yeah, Ellen, what do you get?
The investment is 91 and the interest rate is annual. So what to come approximately?
Oh, yeah. Thank you. So yeah, we need to multiply by the period involved. So 91 days, that's 3 months, right?
Yes,
Or
yes, 3 months.
that's 3 months.
Yes,
So that'll be 3 over 12. Or
yes, please. 3/12.
so that'll be 3 over 12. So let's do that.
21. 21. Oh, okay. I think I've watched the video in MSL.
84,000.
84,000.
451.6887. 451.86.
86. Okay. Yeah, Eric, you understand?
Getting 10198.
Why are you getting the 101? Is it a final answer?
And that's what I'm getting for
The investment income.
the investment income.
Okay. Another person should confirm.
So it's 84,451.86.
84,451.86. So they are getting the same thing now. Eric, check yours. So this is the borrowing cost to capitalize in this case. So yeah, if you really want to get the total cost, the actual total cost, since I wrote in each cost at the top, let me write actual total cost of the infrastructure. Yeah, we need to add the borrowing cost to it. So yeah, it's going to be the initial one we had here plus the borrowing cost estimate we had here. Do you really get it?
No.
Questions? Did someone say no?
Yes, please come again with. You said you
Yeah,
added.
when we're calculating for the cost of the tunnel, how do we get it? We use the amount that we use plus the borrowing cost to capitalize, right?
Yes.
It's the same thing. The cost of the infrastructure, we had this, right?
Mm.
208,272.50. Then we add a borrowing cost to capitalize to it.
Oh, okay.
And that's what is giving us this figure.
Mm-hmm.
Eric, your hand is still up?
Sorry, sir.
Okay. Any other? Okay, let's make progress in that regard. Move on to question 5.
Okay. You assumed the position of the finance officer of Cape Coast Metropolitan Assembly on 1st January 2022. Your first assignment was to oversee the preparation and presentation of 2021 financial statements, which were expected to be Ipsas compliant. Your examination of the financial report revealed the following transactions among others. A. Ipsas 12, that's effect of changes in foreign exchange rate. The assembly bought a new car on credit from Toyota Company for use by the MCE at a price of $100,000 on 1st October 2021. The invoice value was due for settlement in 2 equal installments on 30th November 2022 and 31st January 2022. The exchange rate moved as follows. On 1st October 2021, 6 cedi is to $1. 30th November 2021, 6 cedis 20 pesos is to $1. 30th December 2021, 6 cedis 50 pesos is to $1. And 31st January 2022, 6 cedis 40 pesos is to $1. B.
Okay, so let's finish with this. So here we have to prepare the extracts for this. How do we go about this? So remember that with foreign exchange, at the dates that you bought the item, you need to translate. So that's the first thing we do. So yeah, we're solving question 5.
Say.
Yes, sorry, I was a little.
Sorry. Yeah, sorry to interrupt. I wanted you to just scroll a little bit up. I want to see something with the question you just solved. Your spreadsheet.
This will be shared though.
No, I mean your spreadsheet.
That's what I'm showing.
Hello, sir.
Yeah, Eric, your hand is up.
Please, how did you get the 2,486?
Hey, yeah, this is the second time someone is asking this question. Bring
Uh,
the cost of the this one, the assets that we
yeah,
had. Add the borrowing cost to it.
when cost to capitalize.
Yes,
Okay. Thank you.
you're welcome.
So please, I'm fine. Thank you.
Let's move on to question 5. So question 5A, we are doing the A aspect of question 5. Yeah, we are dealing with foreign exchange transaction. we bought a car. So on the date that we bought it, we need to translate the figure at that date. So we need to get a foreign equivalent of it. We need to get a Ghanaian equivalent to it. So to convert, we need to know the exchange rate prevailing at that date. So that's 1st October 2020. The exchange rate on 1st October 2020 is 6 Ghana cedi to $1. So that will be 6 Ghana cedi equivalent to $1. Yeah. So let me bring the dollar first. So $1 here is equivalent to 6 Ghana cedi. And then here on the date we had $100. We convert this to Ghana cedi. So how do we do the conversion to Ghana cedi? So that will be $100 divided by $1 times 6. What are you going to get?
600,000.
600,000. So this will be the initial value of our. This will be the initial value that we have for the item. This will be the initial value of the item. Now we need to check, or we should check whether you made payments within a year or otherwise. If you make payments within a year, you know that you need to translate that and get your foreign exchange gain or loss at that date you make payments. If you didn't make payments within a year, at year end, you also have to check for the balance, the current balance you have now, and calculate for your foreign exchange gain or loss. So let's check for this one. It says that the invoice value was due for settlement in 2 equal installments. The first one on 30th November 2021, and the second one on 31st January 2022. So yeah, we are dealing with 2021. So the second payment doesn't fall within our current reporting period. So yeah, we are only going to deal with the settlements for 30th November 2021. And you remember they said 2 equal installments, and you only paid half on 30th November 2021. So we paid only half of the amount of money. So if we are to pick, so remember the total amount of money at the initial was 600,000. If you have to pick half, bear in mind half will be 300,000 at the initial date. We need to compare half of that amount to what we paid on the November date. So on the November date, that's 30th November 2021. We need to find the exchange rates prevailing at that date. The exchange rate prevailing at that date was 6.2 Ghana cedi to $1. So yes, $1 equivalent to 6.2. Then we convert that's going to be $100 Ghana cedi. Then we convert this. So that will be this. I'll just change it. We are paying half, right? So it's supposed to be 50. So let me change it to 50. It's just 50 that we are paying. So times 6.2. So what are you going to get?
310,000.
310,000. Yeah, so on this date, we need to calculate for the exchange gain or loss. So yeah, we're going to get an exchange gain or loss. Bear in mind that we only paid half. So at initial, if you have to pick half of 600,000, so if you have to pick half, know the original amount, half of the 600, that will be 300, right? That will be 300. So yeah, let's compare. At the initial, we were supposed to pay 300,000, but now on 30th November, we are paying 310 for the item. I'm making an exchange gain or exchange loss. I'm making a gain or a loss. I'm making a gain or a loss. Yeah, Collins.
Yeah, I'm making it.
And loss. So the loss here will be 310 minus 300. So what do we get?
10,000.
We get 10,000. Get 10,000. Then we move on to the next thing, which is at the year end. Bear in mind, we didn't have any payments until next year. So the ultimate left is the year end, 31st December 2021. Now, 31st December 2021, we only have to ask ourselves, what's our balance now? So in terms of dollars, the total amount of money was $100. We have paid $50,000. So we are still owing $50,000. So we need to translate this figure to at the year end. So 31st December 2021 was the exchange to 6.5 to $1. So we do that $1 to 6.5. 6.5. So we convert that. So let's do the conversion. What are you going to get?
$325,000.
Yeah, Eric.
5,000. What's this?
Yeah, 325,000. 25,000. Then year two, we check for the exchange gain or loss. So are we going to get an exchange gain or are we going to get an exchange loss? Don't forget that the initial date, it was still 300. We did half of it. Yeah, the other half is still 300. So closing date, you are getting 325. So are we getting an exchange gain or an exchange loss? In this case? Yeah, Ransford.
So get exchange loss.
Exchange loss. And then loss will be 325,000 minus the 300,000, which will give us 25,000. When we are done in our reports, now present what we are doing. So yeah, it says CCMA, right? That's the name of the assembly. So the assembly on top here, they say it's Cape Coast Metropolitan Assembly. So we'll do CCMA. Yeah. Prepare statements of financial performance as a year ended 31st December 2021. We'll bring our currency sign. Yeah. Yeah, we account for the exchange loss in this case. The exchange losses were two. We had one 10, and that was 25. So 10,000 plus 25. That will give us 35. Then move on to the next one. Statement of financial position as at year end. Yeah, we have a non-current assets. Don't forget, we have bought a car, right? So PPE will come here. And bear in mind, a car needs to be valued at its historic cost. So its historic cost. So the value that we had at the beginning, 600,000, to not change. You bring that value here, 600,000. And then don't forget that we are still owing So bring that one as part of our payables. So current liabilities, we'll have payables in this case. And then we'll bring the closing balance, the amount we still owe at that date. And here we are owing this figure 325. That's why we translated at the year end to get to know our balance. So 325, that's the amount we are owing at the year end. In this case, and we are done. Exchange loss is an expense. Let me show it as negative. So do you get it? Questions on this? Questions on this?
Hello, sir.
Yeah, Collins.
Yeah, a quick one on the November exchange loss. I just want to find something out because as at the December, the one that we recognize at December, the loss was 25,000, right? But as at November 2025, if we have paid everything, the rate was
We
around
paid half.
6.5. Yeah, we make half. So, but the rate was around 6.5.
6.2
6.2,
as of
sorry.
November. As of November.
As at, yes. So won't that affect the remaining half as at that time? Because that's the exchange. If we were paying even all the money, we would have paid around 6.5.
No,
But
we
we
don't
did
do it
not.
that way.
Okay.
Yeah, we don't do that. On settlement, the aspect you paid is what you compare.
Okay, yeah.
We don't look at the totality of the amount and say that now. So you are trying to say that now the rate is 6.2. So when we come here, we should rather use the 6.2, not the original. That's what you're trying to say, right?
I was thinking that we will have recognized the 6.2 as the balance for the rest to be paid on the next settlement.
No, this one you have paid it. So the double entry, I didn't do double entry for this, but the double entry here will be between the cash and payable. You have paid. It will be between your cash and
Yeah.
payable.
Yeah, I'll get you.
And then the exchange loss will go into your expense and cash. That will be expense and cash for a difference of 10,000.
Yeah, I've gotten it.
Yeah. Chrissy, go ahead.
Yeah, so I get what he's saying. If you use that approach, you get a different answer.
Yeah. That's why I said no. If you get a
Okay.
different answer. Okay. Any other? Okay, it's 3:34. Let's go for a short break. When it's 4, we resume. Let's go for a short break. So when it's 4, we'll come back and continue. So I'll pause the recording at this point. When we come,
Hello, sir.
yeah, we are back.
Yeah.
So let's proceed in that regard. So we're moving on to the question 5B. Question 5B. Are you around? I hope you're not tired.
No.
Okay, then go ahead, continue for us.
Okay. Ipsas 21. Impairment of non-current generating assets. The following relates to three intangible assets in respect of their assembly as at 31st December 2021. Brands, software, and trademarks. Their carrying value, their respective carrying value, their respective net realizable value, and their respective value in use. Required. Explain, together with quantitative calculations, how each of the above transactions would be dealt with in 2021 Statement of Financial Performance and Statement of Financial Position as at 31st December 2021.
Okay, so how do we go about this? So we need to know the measurement rules for impairments. So impairment for non-cash generating it. How do we calculate for impairment? We first have to check the condition for impairment. And the condition for impairment is that the current amount of the assets should be greater than the recoverable amount. That's the first you check. And the second thing is we need to check for how to get the recoverable amount. How do we get recoverable amount? In this case, how do we get recoverable? Yeah, so recoverable amount is the higher of your value in use, and then your fair value less cost to sell, also the same as your net realizable value. So that's that. Now, what happens if you don't meet the condition for impairment? The condition says that your current amount should be greater than recoverable amount. What happens if you don't meet this condition? What will be our result?
Sir, please come again.
So if the condition for impairment is not met, what happens? What do you write?
Nothing. There's no impairment.
There is no impairment. So yeah, if you realize that the condition for impairment is not met, you just write that there is no impairment. So let's start with brand. Yeah. We first have to get a recoverable amount. So we compare the net realizable value with the value in use. Which one is higher? Which is higher?
The value in
Answer.
use.
Okay, so say the value
Answer.
use. The
The
value
value
use.
in use. Yes, that's 240 by it. Then we check the condition for impairment for brand. So the condition for impairment stipulates that current amount should be greater than the recoverable amount. The recoverable amount you are getting for brand is 240. Is the current amount bigger than that? Is it meeting the condition?
No.
No. So impairment for brand will be what?
Zero.
We don't have any
But
value.
the asset is not impaired.
Yeah, so yeah, it's nil. We don't have a value for this. Yeah, it will be nil. Then we come to software. So software, we look for the recoverable amount as well. We compare the naturalizable value and the value in use. Which one is the higher figure?
Value in use.
Who's sum it up? Yeah, rounds for
The value is
the value in use. Then we check the condition for impairment. So when we check the condition for impairment, do we have impairment in this case or we don't have impairment? Is it met or is not met?
It's met.
It's met. So then we look for the difference. So the current amount is 300. The recoverable amount is 260. What is our impairment figure?
40,000.
40,000. Then we move on to the next one, trademarks. The value in use is 180. The naturalizable value is 200,000. What's the higher value in this case?
The
What's our
net
recoverable
value.
amount? The naturalizable value
Yeah.
is the higher. So we also compare to get the impairment, or we check the condition for impairment first. Is the current amount greater than the recoverable amount? Yes. Then we compare for impairment. So let's compare what would be our impairment in this case.
40,000.
40,000. So yeah, if you are reporting, over here, so you can prepare a statement CCMA, and I'm preparing a statement here. So bring impairment. So 40,000, 40,000, and we add the two together. So this will be 80,000. Then statement of financial position. Non-current assets. We'll do PPE here. So yeah, we'll bring the current amount for each case for the brand. Bear in mind there was no impairment, so the current amount will still be 200,000. Yeah. When we go to software, so software, bear in mind that our net realizable value was 260, and after impairment, the new value you use your recoverable amount, which is the 260,000, or you just pick the current amount of the assets, which is 300 minus 40,000. That should still give you 260,000. So we'll bring out 260,000 in this case, and then lastly, we bring the recoverable amount here, which is at 200,000. When we sum the three up, what do we get?
660.
We'll get 660.
660,000.
Okay. So that's it for question 5B. Is there a question on this? Okay, let's move to the next question. Question 6. Here's one I recorded.
But please, I'm a bit lost at the financial position side. Can you please go over it? The PP?
I should do it.
Please go over it, how we had those values.
And so, yeah, you bring the carrying amount of the assets for each. And after impairment, your carrying amount is your recoverable amount. So for brands, we're not having impairment. So the carrying amount was 200. Software, the recoverable amount was 260. Trademarks, the recoverable amount was 200. That's why we picked these figures.
Oh, okay.
Okay, let's go to question 6.
Question 6, Ipsas 27 Agriculture. The Ministry of Agriculture formulates policies for implementation by the agencies under its fold. An agency under the Ministry of Agriculture has the following financial transactions during the year-end review. The transactions relate to the entity's biological assets. One, the agency engaged in agricultural activities within the scope of Ipsas 27 and has a large stock of sheep and herd of cattle.
Yeah, are you there? Can anyone hear Arida? So I can hear.
Yes.
I think she's gone. Yeah, can we get a different person to read for us? Can we get a different person? Let me mention someone's name. I think okay, Faustina, go ahead. Read for us.
The agency engages in agricultural activities within the scope of Ipsas 27 and has a large stock of sheep and herd of cattle occupying a 7-acre piece of land. The land costs 250 Ghana cedis per acre, and this land is entirely put into the service of the livestock business. The size of the land was suitably acquired to enable the creation of a grazing yard for the animals and serve as a grazing ground in the commercial venture to other livestock owners in the catchment area. This grazing ground venture takes 6 out of 7 portion of the land. 2. Wool production from the sheep venture had a market value of 678,980, while the yarn and hide or skin carpet produced from the venture also generated 2,431,600. Some of the hides of the animals were put into making of shoes and leather belts and bags, which were exported to the Italian market and earned the agency €256,985 at the time when the exchange rate was 16 cedis 75 pesos to €1. On the reporting date, the exchange rate was 16 cedis 95 pesos to €1. 3. The head of cattle produced raw milk which had a market value of 282,867,000. However, 75% of the raw milk was processed into which the agency sold at 6,950,000 during the year. 4. The agency also harvested rich woods, logs. The market value of the rich woods at the time of harvest was 2,786,230 Ghana cedis. Additional direct labor cost in processing and organizing the wood for export was 946,800. The rich woods were processed and exported to the European market, which earned the agency an IGF, which when converted into Ghana cedi was 7,612,478 Ghana cedis. 5. The agency owns a fruit cannery at Nsawam and undertakes pineapple farming to supply the cannery. Pineapples produced and supplied to the fruit cannery yielded 680,000. The fruit juice from the cannery has a great appeal to the Ghanaian and foreign markets. The processed fruit juice sales generated revenue of 2,955,000 to the agency during the accounting year. Required: I. Explain how the land I should be treated in the books of the agency. II. Explain how revenue will be recognized under each transaction in 2 to 5, indicating the amount to be recognized under Ipsas 27 Agriculture.
Okay, thank you. How do we go about this? So first, let's look at agriculture a little before we zoom. Yeah, so agriculture, which is Ipsa 27. Yeah, you should know that agriculture deals with two major items. It deals with biological assets and agricultural produce. And you should know that in this standard, we don't refer to what we call bearer plant. Someone will say, what is a bearer plant? Yeah, a bearer plant is basically what produces agricultural produce. So for instance, if you want cocoa, the cocoa tree is a bearer plant. We don't account for the tree in itself. The standard only makes provision for agricultural produce, what you get from the tree, and not the tree itself. So bearer plant here is covered under secret standard. That one is IAS. In this case, you're doing Ipsas 17. That's covered under Ipsas 17. So the standard only accounts for what we call biological assets and agricultural produce. Let's look at the measurements. What is a measurement? Let's start with initial measurements. Initial measurements for either biological assets or agricultural produce. Here it says that it's going to be at fair value less cost to sell. The only thing the standard makes clear over here that your agricultural produce here they are going to account for should be at the point of harvest, just like we did for inventory. Should be at the point of harvest. So when you're dealing with agricultural produce, remember that one is always at the point of harvest. Initial measurement is fair value less cost to sell. What about subsequent measurement? Subsequent measurement too is the same thing again. It's fair value less cost to sell. And since it's fair value less cost to sell, there's a possibility you can get fair value gain or loss. So if you get fair value gain or loss, you are going to account for it in your statement of financial performance. So in statement of financial performance, you account for this. The standard says that, however, if you see that in the question, you can't determine fair value. So if fair value is not determined, if you can't determine fair value of either the biological assets or if fair value cannot be determined, let me just do it that way. If fair value cannot be determined, then you are going to use cost less accumulated depreciation. So you bring your costs, you less your accumulated depreciation, you less impairment. So these are the measurement rules you need to be abreast with. So let's go to our question in this case. So Arita, let me worry you again. We'll take it one by one. So remember the requirement said I. We should look at how we are going to account for I. That's the land in the books of agents. So Arita, let me worry you again. Take just I for us in this case.
Okay. 1. The agency engages in agricultural activities within the scope of Ipsas 27 and has a large stock of sheep and herd of cattle occupying a 7-acre piece of land. The land costs 250,000 per acre, and this land is entirely put into the service of the livestock business. The size of the land was suitably acquired to enable the creation of the grazing yard for the animals and serves as a grazing ground in the commercial venture to other livestock owners in the catchment area. This grazing ground venture takes 6 out of 7 portion of the land.
Okay. So this question, this is just the land. How are you going to account for it? Is it is it an asset under Ipsas 27 or it's not an asset under Ipsas 27? That's basically what the question is asking you. So is it a biological asset or an agricultural produce or not? That's what the question is asking. Hello, are you there? Yeah, Kobe, go ahead.
Yeah, it's a biological asset, so it will not be treated under agriculture.
It says it's a biological asset.
Yeah, under PP.
It's a biological asset.
Yes.
Are you sure?
Yeah.
Your resultant answer is correct, but the beginning is wrong. Yeah, it's a PPI item, I agree with you. But it's not a biological asset. The definition of biological asset is a living animal, right? A living thing, the thing is living. So a living animal or plant is regarded as a biological asset. Over here, the land here is not a biological asset. So yeah, it's either you account for the land in line with PP or investment property. Either the land is a PP item or an investment property item. So you're right. Your resultant answer is correct. But it's not a biological asset. Land is not a biological asset. It can be a bearer plant. The land can hold bearer plants. That means you can have trees on it that you use as elaboration they give there. If you have some sheep on it, you have herd of cattle on it. So you can be a yard for that. But in itself, the land is not a biological asset. Rather, what would be a biological asset here would be the sheep, the cattle. Those ones are biological assets. You get it, Kobe?
Yes, please.
But at least you're right.
Yeah,
You're
thank
right with the
you.
treatment. So for the treatment, you're right. You're right. So
Okay.
this will be accounted for under PP. That's IPSA 17, right? So indicate that you account for it under IPSA 17 or investment property. What's the standard for investment property? I think that's 16, right? So either IPSA 17 or IPSA 16. So we are done with I, the first one. Arila, let's go to second. Yeah, Ransford, you have a question?
Yes, sir. So, sir, under what circumstance or condition will it be treated as
I can't hear you.
under what condition will it be treated under the agriculture?
There is no condition to be treated under agriculture. Land is a PPE item or an investment property item.
Okay. Okay.
It's not an agricultural, neither is it a biological asset.
Okay, sir. Thank you.
Okay. Let's go to two. Remember the requirements for two to the fifth one. He's saying that we should look at how revenue will be recognized under each case. So here our focus is on revenue in line with the standard Ipsas 27. So how revenue will be recorded under each case. So let's go to 2. Arira, can you reassure this?
Yeah, I'm back. My internet disturbed me.
And Dorcas, you are back.
Yes, please.
Okay, you're welcome back.
Thank you.
Continue reading for us, reader.
Wool production from the ship venture had a market value of 678,980, while the yard and headship carpet produced from the venture also generated 2,431,600. Some of the heads of the animals were put into making of shoes and leather belts and bags, which were exported to the Italian market and earned the agency €256,985 at the time when the exchange rate was 16 cedis, 75 pesos to €1. On the reporting date, the exchange rate was 16 cedis, 91 pesos to €1.
Okay, thank you very much. So yeah, first thing you have to check the agricultural produce we have here. So when you go into this question, what are the agricultural produce you see? What are the agricultural produce we see? Okay, you're not seeing anything produced from
The wool production.
Okay, Faustina, your hand is up. Go ahead.
The wool and the hide.
So the wool production is 1. So yeah, we have 1 wool production. Okay. 2 is the hide and skin carpet. Okay, that's 2. Linda, your hand is up.
Yeah, so I was about to say that the hides too has been used to produce shoes and leather bags as well.
Okay, so third one we have shoes and leather bags as well. Okay, so we have 3 produce in this question. Now, what does the standard say? The standard say that agricultural produce should be at the point of harvest. So my question, which one is at the point of harvest? Out of these 3, which one is at the point of harvest?
The wood production.
It's the wool production that you harvested first. The rest are all processed from the wool. So yeah, our revenue is only from the wool production, which is this amount. You are done. So this is the answer for the second one. Our revenue here will be 678,980 only from the wool production. Why? The standard says that agricultural produce should be at the point of harvest. I emphasize that, and I was explaining that here. The agricultural produce should be at the point of harvest. So that's what we have there at the point of harvest. So that will be our revenue figure in that respect. Hey, mute yourself. So the effect, I think someone is using 2 devices. Mute one. If you're using 2 devices, mute one. Okay, so that's that. Let's move to the third one.
The head of cattle produce milk, raw milk, which had a market value of 202,876,000. However, 75% of the raw milk was processed into cheese, which the agency sold at 6,950,000 during the year.
Okay, so this is what we have. Yeah. So first, we need to identify the agricultural produce. What is the agricultural produce we have here? You can see we have raw milk, and then the raw milk was also processed into cheese. So the next question I will have asked is, which one is at the point of harvest? The point of harvest is the raw milk, right?
Yeah.
Yeah, and the raw milk revenue we are getting is what 2,867,000. So that will be your revenue in that case for the third one. Okay, let's move to the fourth one.
The agency also harvested rich woods logs, rich woods into bracket logs. The market value of the rich wood at the time of harvest was 2,786,230. Additionally, direct labor costs in processing and organizing the wood for extract was 946,800. The rich woods were processed and exported to the European markets, which earned the agency an internally generated fund, which when converted into Ghana cedis was 7,612,478 Ghana cedis.
Okay, so my question to the class, what will be the revenue in this case? We have solved some two questions already. What do you think will be the revenue for and why? What is the revenue figure?
I think it is 2,786,230.
Why?
Because per the standard, the rules says that for us to get the revenue, it's supposed to start from, let's say, at the point of harvest. So at the point of harvest, we realize that the amount indicated over there as 2,786,230.
Okay, that's good. Let's go to question 5. So read that question, the last one, the fifth one.
The agency owns a fruit cannery at Sawini and undertakes pineapple farming to supply the cannery. Pineapples produced and supplied to the fruit cannery yield 680,000. The fruit juice from the cannery has a great appeal to the Ghanaian and foreign markets. The processed fruit juice sold generated revenue of 2,955,000 to the agency during the accounting year. Required. Explain how the land.
It's okay. So the fifth one, yes. What's the revenue also? What's the revenue? Yeah, Colin, go ahead.
So the revenue will be 680,000, 680,000. That was a pineapple produce.
Why 680?
Because
And not the fruit juice figure. Why 680 and not the fruit juice figure?
that's at the point of harvest for agricultural produce.
Exactly. So when we harvested the pineapples, that was what we got at that point of harvest. That's good. So we are done with this question. We have a B question in this case. So Arida, let's go to this.
The University of Ghana has a cattle ranch which currently holds 400 heads of cows, 100 heads of bulls, and 200 heads of calves. 80% of the heads of bulls weigh 1,500 IBF, and then the remaining 20 weigh 1,100. All the heads of cows weighed averagely 1,200 IBS. Available market information shows that beef is currently sold at 250 per IBF, IBS, the head of cows are too young to be sold. However, the cost incurred on each half to date is about 10,000 on average. The additional expense that will have to be incurred to process each herd of cows and bulls for sale is an average of 2,000 per unit. Required. Explain the accounting treatment for those biological assets in the books of the University of Ghana.
Okay, so explain. So yeah, you have to mention the standard first, Ipsas 27. So tell us that this question falls under the ambit of Ipsas 27, right? Then you tell us the measurement rules. You tell us the measurement rules, which we have done here. Initially, you measure at fair value less cost to sell. Subsequently, you measure at fair value less cost to sell. If the fair value cannot be determined, you use cost less accumulated depreciation less impairment. Then you tell us that your calculation is shown below. Then you show us your calculation. So yeah, let's go ahead. So yeah, we have biological assets here. We have cows, we have bulls, and we have cows. So out of all of these ones, we know the quantity of meat or beef. Here they say beef. Let me use what you know the beef we can get from each of them. So we need to know the number of beefs we can get from each of them, multiply it by their respective fair values. If there is cost to sell, we're less in that case. So that's how you go about this question. That's all. Nothing complex. So let's do the solution. This is question 6B. So there's a sequence, question 6B. Let's solve that here. So question 6B. We have cows. So let me start with the cows. Yeah, we have cows. We have cows here. How many cows do we have? 400 cows. 400 cows. They told us, they have given us the weight for all our cows. They say all the cows weight 1,200. So we need to know the total weight. In this case, to get a total weight, the number of units for our cows was 400. So 400, then multiply by the average weight, which is 1,200. So now we know the number of meats we can get, or beef we can get. So this one will give us a number, and then we multiply by the fair value price. Let me just do price to get the value. So what's the number of the quantity? 400 by 1, 2. What are you going to get?
480,000.
480,000. Next, we bring the price. What's the price? We're told that the beef, we can sell it for 250. So we bring 250 so that we can get a value. So there is for the cows. You are done with the cows. The next we move to the bulls. The bulls. So we come to the bulls. And for the bulls, they have given us two separate ones. They said 80% of the bulls weigh this. And then they remember that's the 20% weigh this. So there are two weights. So you have to do that one separately. You have to do the 80% separately. So we'll do the 80% separately. 80% we multiply it on the number of bulls. What's the number of bulls here? We have been given 100 hairs of bulls. So it's 100. Then multiply with the equivalent weight. The equivalent weight for 80% is what? 1,500. So multiply by 1,500. So that we can get a quantity for the first one. Then we come to the other one, the 20% one to on 100. And then I'll multiply by that rate, the weight for that one. That one is 1, 1. 1, 1. So what do we get for each?
The first one is 120,000.
First one, 120,000. The price
And
is
22,000.
and yeah, it's 22,000. Okay. We multiply them to get their respective. So this will be 30 million and this will be 5 million, 5.5 million. Then we have one left. That is a curve. Yeah, the curve is left. So let's see the information on the curves. The cows, yeah, there's the cows information. Say that the head of cows are too young to be sold. Once they say they are too young to be sold, it means that we don't have a market, active market for the cows. If we don't have an active market for the cows, it means you don't have fair value. It means you don't have fair value. That's the meaning of this. And remember what we said, if you don't have fair value, what do you use? You use the cost less accumulated depreciation, less impairment. So yeah, for the cows, you have to use the cost. You have to determine the cost. If there is depreciation less in that regard. So yeah, we're told that the cost incurred on each cow is 10,000 on average. So they have given us the cost on each cow. So we need to know the number of calves, which is 200. So yeah, we bring 200 times the cost for one, which is 10,000. So what will be the value for the cow? So this will be the value straightforward. Bear in mind the cow zones have an active market, so we didn't calculate for the fair value like we did for the others. So yeah, it will be 200 times 10,000. What will we get?
2 million.
2 million. Then I think we're having cost to sell, right? So the additional expenses that would have been incurred to process both. So bear in mind, the cost to sell is for both the cows and bulls. And I think you should understand why they give it for just the cows and bulls. Because the calves one, we couldn't determine the fair value because it doesn't have an active market. So we can't calculate for its corresponding cost to sell. So that's why they gave you for just the cows and bulls. So yeah, we bring our cost to sell for both the cows and bulls. Yeah, and what is the cows and bulls? The number of them. Bear in mind, it was 400 and then the bulls was 200, right? The cows were 400. The bulls was 100. The bulls was 100 rather. So 400 plus 100, that will give us 500. That will give us 500. And multiply by the cost. What was the cost they gave? So on average is 2,000 per unit. So multiply by 2,000. So what's our cost to sell?
1 million.
1 million. Then we sum all of them together, and this becomes the value. So this becomes our answer in that regard. Questions? Is there a question on this? Question on this? Okay, there's no question. Move on to the next aspect. Question 7. What is on event after reporting date? So this, I think this has been tested before. The first time it came as a theory question. Yeah, considered as a theory question. Although it can be asked as calculation as well. So events after reporting dates. Let's do a little rundown on that. Events after reporting date, as you know, are events that occur after the reporting date and before the financial statement will be authorized. So before the financial statement is signed, it's after the reporting period, but before the financial statement is signed. And here we have two main types of events after reporting it. We have adjusting and the non-adjusting events. So we say adjusting events are the events in which the underlying conditions still exist as at the year end. So it exists before or at the year end. And the non-adjusting, those ones do not exist before or at the year end. They don't exist before or at the year end. So yeah, let's look at this question and then we just classify this and then we move away from this. Arida, can you read for us?
Okay. Addison. A at the same year end is 31st December 2017. The flying event all occurred in January 2018. State whether the events below would be classed as adjusting or non-adjusting events. Insolvency of a customer. Loss.
Okay, so let's take it one by one. So insolvency of a customer, is it adjusting or non-adjusting? Karen, go ahead.
Something that is adjusting events.
Why?
Because the insolvency of a customer, I think it has been, they will see the same thing after the reporting. Maybe in case the company is, the customer is doing the company is not able to pay. It's one of the things that the customer is answer. So the adjustment.
Okay, yeah, you're right. So the insolvency of a customer, the conditions underlying is before or at the commencement date, definitely. That's why we make provision for bad debt. Because we have it in mind in accounting that these are customers, some of them might not be. So this is an adjusting event. So that's correct. There's an adjusting event here. The next item.
Of inventory due to a flood.
Loss of inventory due to flood. Is it an adjusting or non-adjusting event?
It's an adjusting.
Why? If adjusting, why? If non-adjusting, why?
It's an adjusting event because probably the inventory was in the books of their accounts, and then probably a heavy rainfall came and then they lost some of the inventory.
Okay. Okay. Any other submission? Do you agree with it? Okay, Ellen, your hand is up.
It is non-adjusting event.
Why?
Because the flood happened after the reporting day, so it's non-adjusting. The flood happened after the reporting day, so it is non-adjusting.
Okay, so that's
But
Ellen's daughter's fault.
we disclose it. We disclose it when it is material, and the event is material, so we disclose it rather than adjusting.
Okay, let's go to Collins. Collins, what about you?
There is an adjusting event because those inventory evidence of that inventory exists within before the end of the reporting period, and that loss, those inventory may be part of the closed inventory, which we need to go and adjust our closed inventory for the year. Thank you.
Okay, that's Collins' submission. Eric, you wanted to say something?
Yes, sir. So I think some of us are not on mute, so I was not able to hear whatever that they were saying. So I don't know if you can.
So in your own thoughts, is it adjusting or non-adjusting? That's what you're saying.
Okay, so it's adjusting.
It's adjusting. Why?
Because if lost an inventory due to flood, and maybe at the end of the year we've already had the total clothing. Because of that, it's either we are going to overstate our inventory, or I think you have to adjust it to the right inventory that we are having.
Okay. So that's your thoughts. Christian, go ahead.
So I would say it's a non-adjusting event.
Why?
Because the loss of inventory is due to flood, which is a natural disaster and cannot be anticipated.
That's the answer. Non-adjusting. So if it's due to a natural disaster, in your financial statement, you provide for natural disaster. No, we don't provide. So the underlying condition was not there. So it's a non-adjusting. So that's the answer, oh my people. It's non-adjusting. Reason natural disaster. Okay, next.
Evidence showing that the net realizable value of inventory is
You have
below.
skipped one. Oh.
Sorry.
You have skipped one.
Completion of the purchase of another company.
Completion of the purchase of another company. Is it adjusting or non-adjusting? Yeah, Collins, go ahead.
Like, this is a non-adjusting event. Therefore, disclosure
Why?
will be. This completion of a purchase of another company, I don't have it. But this is a non-adjusting event, a major activity that I've okay, but which disclosure need to be made to the users of the financial statement.
Okay. iPhone. Man, what's up? Go ahead. Okay, Josephine, go ahead.
I think it is non-adjusting because the company was acquired at the end of the year, and its operation will start the next year. So that's it.
Okay, so it's non-adjusting. The reason being that the acquisition occurred after the reporting date, and consolidation. Those who are doing FR, you only start consolidating on the day you acquire the firm. So this one is a non-adjusting transaction. Okay, next item.
Evidence showing that the net realizable value of inventory is below cost.
Evidence showing that the net realizable value of the inventory is below the cost. Below the cost. Yeah. So what do we do? Is it adjusting or non-adjusting? Faustina, go ahead.
It's adjusting event.
Why?
Okay, so it existed during the previous year, and it says it's evidence showing. So if in the current year or at the reporting date we see that the amount we realize from the sale of the inventory is lower than the cost, then we have to go back and then adjust it.
Okay, that's correct. Let's move to the next one.
A court case from August is settled by Addison.
So, court case, is it adjusting or non-adjusting? Yeah, Christian, go ahead.
There is an adjusted event because it occurred during the year.
Okay, so the court case, they said it was settled after the year end, but it started from August. So if it was settled after the year end, the underlying condition was existing before or at the commencement, before or at the reporting date. So that's correct. Next, let's go to the last one.
The discovery of a fraud showing the financial statements were incorrect.
Okay. Is it adjusting or non-adjusting? Yeah, Helen, your hand was up. Why?
It says like it's like error, accounting error. So you go back to the
Okay, so you're right. So this is an adjusting event. The values are used for the financial statement. If you realize that it's incorrect after the year end, it's an adjusting event. Definitely. So that is an adjusting event. You need to adjust for that and correct that. Okay, so that's for question 7. And these are some theory questions I added so that you can go through on your own over here. Sorry, we'll close early today. I started teaching from morning now. Not gotten some rest. So we'll end for today. In the next meeting, we'll continue in that regard. Thank you all for joining. See you in the next meeting.
All right, thank you.